Hello and welcome. In this lecture video, we'll be continuing our discussion of allocating profits and losses to partners. Okay, so in the last lecture video, we talked about allocating profits and losses based upon stated ratios in beginning balances in capital. And now what we're talking about is based upon service contributions and also capital balances, and then also on the stated ratios. So it's a combination, okay? And what we said was that there's two situations. If net income exceeds all the allowances, and then also on the other situation, if net income does not exceed all the allowances, it's less than all the allowances. So let's look at this first situation. Let's say that net income is $70,000, okay? And let's also say that Kayla receives a $36,000 salary allowance and Perez receives a salary allowance of $24,000. Okay, each partner is allowed an annual interest allowance of 10% on their beginning capital balance. Any remaining is shared equally, so that's based upon the stated ratio. So this is based upon service contributions, capital balances, and then stated ratio. So we're going to follow this process. We're going to start here, then move here, and then move here. Okay, remember, these salary allowances are not expenses on the income statement. They're simply a way to divide the partnership income or loss. So when we're dividing this out, let's do a table. So you know I love tables. So I'm going to write over here, I'll say net income. Then I'll say my salaries allowance. And then I'll say interest allowance. And then I'll say my final allocation, like that. And then I'll say total down here because I'm running out of room. And then what I'll say is to Kayla and then to Hector. And then I'll say balance and income. Okay, so I've got my table set up like this. So I have my initial $70,000 in net income, and that's given to me right over here. And then it says Kayla gets 36 and Hector gets 24. So I'll come over here and I'll put 36 for Kayla, and then 24,000 for Hector. 24 plus 36 is 60, which gives us, and subtracted from the 70, which gives us our balance and income, $10,000. Okay, sorry about that. So then what we have is we can take a 10% interest allowance on their beginning capital balances. And remember, Kayla had $30,000 of beginning, their balance in capital, the beginning balance in capital for Kayla was $30,000. That's when we credited capital for $30,000, and then we credited Hector's capital account for $10,000. So 10% of the $30,000 gives us $3,000. 10% of the $10,000 gives us $1,000. So that's $4,000 minus the 10 gives us $6,000 left over, and that interest allowance is based upon here. Any remaining is split equally, so it's 50-50. So that means $3,000 here, and then $3,000 here. And now I can add up the 36 plus the 3 plus the 3 gives me $42,000 total of the 70 that goes to Kayla. And then 28,000 of the 70 goes to Hector. And then our journal entry, again, which would be on 12/31, because it's a closing journal entry. So we would just debit income summary for the 70,000. And then we would credit K Zahn capital for 42,000. And then we would credit H. Perez capital for the 28,000. And then adding those two gets us up to the 70,000, okay? So that's a situation where you can see our allowances, especially with our salaries and then our interest allowances, are still less than our total income, right? It's still less than our total income. But let's look at a situation where it exceeds our income. So So if you think about it, our salaries allowance is 36 and then 24 here, that's 60. Let's say that our income for the year is only 50,000. Okay, so what do we do now? All right, so we're going to set up the same table because tables are fun. So we'll come over here and we'll write net income, just like what we did before. And we'll say our salaries, we'll say our interest, and then we'll say final. And I'm just taking some shortcuts here to say salaries allowance, interest allowance, final allocation. And then I'll say total. And then I'll put Kayla, Hector, and then balance, just like I did on the prior page. Okay? So remember, our net income, the beginning is 50,000, and then Kayla gets 36, Hector gets 24. That means we have 10,000 negative, 10,000 in the hole, right? Because that's 60 minus the 50, we got $10,000 in the hole. And then we have our interest allowance. It's the same. Remember, it's based upon beginning capital. Kayla had 30,000, 10%. Same thing, 10% gives us that 3,000. And then we have that 1,000 just like we had before. So that puts us in the hole 14,000. Now, if we look over here, this last bullet, right? Any remaining balance of income or loss is allocated equally. So that means this is our remaining loss. So it's allocated equally. So that means I'm going to decrease 7,000 over here, put 7,000 of the hole there, and I'll put 7,000 in the hole right there. Now I can add my 36 plus my 3 minus 7. 24 plus 1 minus 7. 32,000. And then 18,000. And then our journal entry, which I'll do up here. Remember, it's on 12/31. It's a closing journal entry. Debit income summary. For my 50,000, credit Kayla Zahn capital for the 32. And then I'll credit H Perez capital for the 18,000. Okay? So my journal entry, debit income summary, credit capital doesn't change. It's just the situation, right, of how much. Okay? So let's look at our partnership financial statements. So when we look at our statement of partners' equity, we're going to be showing our beginning and then investments. And basically it's like what we did before in the earlier chapters, chapters 1 and 2, except that it's for each partner. And then we have a total. Okay? So remember, we had the investments by the partner, and then we have our salary allowances, and this based on the $70,000 net income. So remember, we had the 42 right there, and then the 28. We did that right here. Okay, and then let's assume withdrawals of 20,000 by Kayla, and then 12,000 from Hector. This gives us our ending capital right there. Okay, and the key thing is, the key difference is that it shows each partner. So it shows each partner's investments, and then the allowances, and then the withdrawals by partner, and in total. Okay? All right, so I'm going to end this lecture video now, and then in the next lecture video, we will do quick check problems. Okay? Thanks. Bye.